Hello, this is Japanese Economic Review Channel. Today, we examine Japan's 2025 trade structure using the Ministry of Finance's confirmed data. We will uncover our core strengths, hidden dependencies, and the profound structural shifts reshaping Japan's economic reality. 2025 marks a turning point. Our trade deficit nearly halved, plunging 47.9% year over year. We achieved record exports of 110.4 trillion yen. However, a hidden threat emerges. An 18.1% surge in IT imports, masked by falling energy costs. Total exports hit a record 110.4 trillion yen, a 3.1% increase. Meanwhile, imports flattened at 113.3 trillion yen, growing just 0.5%. This dynamic acted as a massive brake on wealth outflow, shrinking our deficit to 2.93 trillion yen. The recovery from the 2022 historic bottom of a 20.3 trillion yen deficit is remarkable. The deficit shrank to 2.9 trillion in 2025. Notably, the second half of 2025 saw a deficit of just 570 billion yen, showing strong momentum. Deconstructing plus 3.1% export growth, drivers and drags script. What drove this export growth? Finished automobiles stalled at 17.6 trillion yen, down 1.7%. Instead, growth was fueled by B2B sectors. Electrical machinery grew 3.4% and general machinery 2.5%, proving components are our new engine. Japan is dominating the upstream high-tech supply chain. Exports of semiconductor components hit 6.58 trillion yen, while semiconductor manufacturing equipment reached 4.54 trillion yen. We are securing critical global tech choke points. On the import side, we benefited from a 13.2% plunge in mineral fuels. Crude oil fell 11.5% and coal 26.2%. This massive fiscal buffer stabilized our economy, though it highlights our deep sensitivity to global energy cycles. This brings us to the masking effect. Falling fossil fuel prices are hiding an explosive vulnerability. Imports of computers surged 18.1% to 3.86 trillion yen, and communication equipment grew 14.2%. Our digital reliance is permanent. Our global capital flow is highly asymmetrical. We extract capital from the US, generating a 7.46 trillion yen surplus, and broad Asia. Conversely, we bleed capital to China, facing a 7.92 trillion yen deficit, and the Middle East. Zooming in, our 7.46 trillion yen U.S. surplus heavily relies on 5.34 trillion in auto exports. Our 7.92 trillion yen deficit with China reveals complex interdependence, where we import massive amounts of electrical machinery and phones. In Asia, Japan acts as the indispensable component hub. We run structural surpluses with Taiwan, plus 2.90T, and South Korea, plus 2.45T. We supply the critical ICs and base chemicals that fuel Asia's advanced manufacturing economies. Our primary deficit centers are the Middle East and the EU. The 6.90 trillion yen Middle East deficit is an energy drain, driven by mineral fuels. The 2.66 trillion EU deficit is driven by high-value pharmaceuticals and finished autos. Capital allocation is shifting. Legacy cash cows like finished autos and traditional fuels are stalling. The future lies in the top right quadrant. Semiconductor manufacturing equipment and cloud infrastructure are dictating our growth. We are witnessing a paradigm shift. Pre-2020, our strength was finished consumer vehicles. In 2025, our core strength is upstream B2B components for Asian hubs, and our new vulnerability is foreign digital infrastructure and pharma. In conclusion, while we successfully halved the deficit, a new permanent digital vulnerability has emerged. The next decade of Japan's economic security relies on mastering this, digital deficit, while defending our B2B high-tech supremacy. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.